The Repo Roach Motel, because once you check in, you don't check out. And the Fed is setting up a permanent Roach Motel, aka permanent repo facility, in the not too distant future. This is your Repo Madness 2021 update for this week. We have a number of important stories coming out. For those of you who are not familiar with when repo gets in trouble, normally it is very sensitive to spikes in interest rates. So the spike in the yield curve on the US Treasuries will cause problems in the repo market because of how leveraged all these hedge funds, family offices, portfolio managers at investment banks, all these different financial players are with a lot of their trades. So a big spike in interest rates will cause sensitivity. Now, the narrative is that all these banks are flush with cash. So on Tuesday, May 25th, there was over $400 billion, a record, I think even higher than previous highs, parked at repo. An insane amount, I think over $430 billion. And this is claiming that this is going to have to force the Fed to taper, to raise interest rates and taper their quantitative easing program. But there's still an enormous amount more of quantitative easing program to do. Plus, the US federal government is running insane budget deficits. So how do you taper a Ponzi scheme? I mean, you could pretend for a little bit that the government spending is going to go down. You can move trillions off balance sheet into special purpose vehicles, but is that really tapering the Ponzi scheme? The fiat currency and credit Ponzi scheme that has grown by over $20 trillion in just the last 12 to 14 months. I think it might be over 30 trillion now. It's grown in that short amount of time. So the Fed in the not too distant future is establishing a permanent repo facility so non-bank entities and smaller banks, including hedge funds, family offices, money market funds, real estate investment trusts, and smaller banks can borrow directly from the Fed's permanent repo facility. And I think what they're going to try to do, and the Fed got away with this in 2019, the Fed's balance sheet during the repo madness crisis of 2019, starting in August and September 2019, the Fed started taking worse and worse collateral and giving people 100 cents on the dollar. And then the Fed's balance sheet in a short amount of time went up $1 trillion. But now, after March of 2020, with special purpose vehicles allowed, the Fed doesn't even have to put that on their balance sheet anymore. So the Fed can move that off balance sheet. So I think what's going to happen is the Fed's going to start taking worse and worse and worse toxic collateral, different degrees of toxicity. So going from slightly poisonous all the way up to super radioactive levels of toxic sausage assets and giving counterparties 100 cents on the dollar. And this allows the Fed to try to prop up asset prices as long as humanly possible to try to delay or prevent another stock market crash. But they always eventually happen. The Fed just doesn't allow the asset prices of stocks, bonds, and real estate to stay low for very long anymore without more and more intervention. So more and more injections of drugs to try to prop up, to try to get a rally in asset prices, because it's a lot easier to prop up asset prices and collect tax revenues on those than actually grow the real economy. So the permanent repo facility is coming. I suspect there's going to be all kinds of crazy games with it because based on what happened with Repo Madness in 2019 and all the toxic garbage the Fed took away from over-leveraged hedge funds and investment banks back then. And I think a lot of the problems with Repo Madness in 2019 actually led to the stock market crash in early 2020, besides just the global economy stopping and the supply chain problems with the pandemic. So if you want to read more articles about this, there will be about 4 or 5 different articles about this in the information and description section if you want to read more about the permanent repo facility. But there's going to be very little transparency here. That's the bottom line. So the people on Main Street will not have access to the permanent repo facility. This is designed for smaller banks, hedge funds, family offices, real estate investment trusts. So the key large financial institutions to be able to continue to make leveraged trades and investments with easy and cheap credit using the Cantillon effect, while the people on Main Street continue to get more and more screwed. And their standard of living is made more and more difficult via stagflate tax lie, devalued currencies across the globe and increased taxes. Finally, if you like content like this and want to keep it free, please chip in $5 a month to become a patron. There is over 150 articles, charts, and audio podcasts behind the paywall, including 7 new articles on a lot of interesting topics, global macro, specific stocks, and sectors in the last 3.5 to 4 weeks. And I think it is one of the best deals out there for only $5 a month. Hopefully my health problems will continue to improve a little bit and I'll be able to keep cranking out the content. But it's only $5 a month, the cost of a bad cup of coffee, and if you don't like the content, you can always cancel. And you're helping small, independent content creators like me pay my bills, because Google AdWords revenues on these YouTube videos don't pay anything.